Paul Hicken, Chief Economist and Editor-in-Chief at Petroleum Economist, Bill Spindle, Senior Global Correspondent at Cipher News, and last but not least, Michelle Weiss-Bachmann, Principal Analyst at Lloyd's List Intelligence. Thanks, everybody, for joining us today. Paul, let me start with you. And again, looking at sort of the bearish sentiment that continues really within the oil markets, doesn't it? Regardless of some bullish headlines, but we've seen quite a bearish one overnight, which is Trump coming out with his latest statement, amongst many, which is that possible talks in person with Putin, possibly even happening in Saudi Arabia, which is kind of an interesting angle as well. And oil markets have reacted to that, at least in the immediate sense. Are they overreacting, do you think? What difference, and I'll go to Michelle actually with the next question on that. So do you think oil markets are overreacting to that headline so far?
I think they are actually. I think it's basically there's volatility in the market. I think you see this sort of it's actually oil markets are more in a state of paralysis with this push-pull, the bearish trend of tariffs on one side, on the demand side, and you've got the sort of pull of the impact that like the risks around the supply and the knockout supply of Iran and the likes, creating a bullish narrative on the other. And it's the market is trading those headlines at the moment, whether it's a bearish or bullish news, but it is in a kind of range. What I would say is that the market is probably in a slight, you're right, Dale, the market's slightly more of still a bit of a bearish trend. And I think there's overarching these kind of geopolitical trade-offs is the sort of sense that the oil market is in probably this non-OPEC supply is going to be the glut that's there. That's gonna overwhelm demand overall in 2025, and that's been a sort of constant theme. And I think what's going to, if anything's going to shift that, is the sort of if that non-OPEC supply story especially starts to dissipate, and that is probably the big risk to creating a bullish trend in the market and shaking out that version is if we start seeing evidence that US supply is not going to hit sort of the strength that some people expect. Some of the Brazil and the Guyanas, everyone sort of pinned their hopes of all this extra supply. I think the IEA have 1.5 million barrels a day or 1.6 million barrels a day of non-OPEC supply. And I think there's a good chance or good risk that that won't happen, and the markets could end up being much more balanced. And then that's when the trend may shift, and when you see the impact of tariffs or the sanctions really have an impact more maybe to the bullish side.
Yeah, I mean, I suppose second quarter is going to be a big one, isn't it? Because supposedly by then we'll have more clarity on tariffs and where they're going in terms of what Trump actually implements or doesn't. And obviously that's when OPEC Plus plans to, return volumes to the market. And generally all markets have had a few months to sort of settle into the new year. So let's see what happens. Michelle, welcome again. I mean, let's stick to this point of possible ceasefire between Russia and Ukraine in the next few months. Let's assume it happens in the second quarter, just for the sake of argument. What would be the immediate impact on trade flows, I suppose, and oil flows in terms of the shipping sector, particularly bearing in mind the more recent US sanctions on tankers just as recently as January the 10th. So, would we expect a quick turnaround in those more recent stringent sanctions, or how long will such a ceasefire take to percolate into the market if it happens?
Well, first of all, let's just assume that the ceasefire will that in return for some sort of agreement that means the removal of the G7 price cap. Now, my personal view is that the G7 price cap has been a monumental failure. Had it been a success, there would have been no need for OFAC, the Office of Foreign Asset Control, to have sanctioned 150 tankers on January 10. So that's one thing. Those sanctions, by the way, we're a month into it, and I've been obviously tracking that very closely. What they have done is they have disrupted the supply of Russian oil, but they haven't stopped it. And so we've seen some workarounds. We've seen an increase in deceptive shipping practices. We've seen new ship-to-ship transfer zones established in order to be able to facilitate the transfer into, ports of India and China. We've seen UK and EU sanctioned tonnage, trade interrupted. So let's assume second quarter, the G7 price cap has removed. To be fair, I just think that Russia will get more for its oil because those discounts that the price cap has enforced on them are now removed. I hope that's an overly simplistic view, but certainly sanctions have not worked, and neither's the price cap.
Yeah, so we'll see really what impact that would have. I suppose it's a lot of sentiment feeling as well, isn't it, in terms of that part of things rather than fundamentals, perhaps, that may play on prices. Bill, good morning again. Let's talk a bit about global oil demand. We've had one of our news articles on the bulletin today is Bank of America, one of the latest sort of forecasts coming out that actually, this whole, again, this reference to peak oil demand, and that's now it's behind the theory that by 2030 we'll see growth in demand of only 500,000, as opposed to the 1 million, for example, barrels a day expected this year. And of course, that has that implies certain things about the energy transition, doesn't it? And how fast that is also progressing. I mean, would you agree with Bank of America as we stand today? Are we seeing enough progress on energy transition, given this energy security argument that we've had the last 2-3 years? Do you think this Russia equation now will sort of thrust the energy transition back into front and center and give it a bit more impetus and put energy security in the background? Where are we standing today?
Yeah, I think the main thing going on with the oil demand forecasts, which do all seem to basically be converging on the idea that we're going to see some sort of peak around or before even 2030. It's really a combination of structural and cyclical factors in China. You've sort of got this structural move in transportation towards EVs that's trimming off, a bit each year. And meanwhile, you've got a real, a Chinese economy that's struggling overall with this whole property thing in a sort of cyclical sense. So those two things are both working to dampen oil demand over that period. And I think, likely most of these forecasts are converging on demand peaking around 2030-ish and then staying pretty much plateaued at that. And that's sort of on the idea that both these structural cyclical forces dampen any growth until then. And then as the economy starts to recover, you've really got, EVs roaring along. They're already above 50% sales, I think. And, that'll keep capping it in the long term. I think the upside risk, the risk is that transportation, transformation happens even faster. But, that's sort of what I see it too.
Okay. All right. Thanks, Bill. Paul, back to sort of the Russia equation, but let's talk a bit about OPEC and OPEC Plus planning to start releasing volumes in the second quarter. A lot of commentary this week and as you just referred earlier in your comments to, there's doubts over non-OPEC supply coming on as much as it might be expected to. Brazil, for example, last year disappointed, so that might help OPEC's case. But now with the Russia equation. And assuming, that there will be just a bit more oil flowing more freely, let's say, if that does happen, could that throw a spanner in the works for OPEC Plus? Or do you think that, as others in the market are saying, that they're going to start putting these increments back no matter what? It's time.
Yeah, well, I think there's a lot of spanners in the works for OPEC Plus at the moment to deal with all the tariffs and sanctions. But and I think they referenced that in their report yesterday as well, that the risks of destabilizing what they see as destabilizing forces, and they navigated quite successfully and effectively last year through a lot of geopolitical risk. They kept oil prices, they stopped oil prices collapsing, and they provided a de facto floor in the market last year, and they're continuing to do so. And I think what we'd like to see is, regardless of the noise, they're going to wait and see, because a lot of this is talk. Remember, with Donald Trump's a deal maker. They'll wait and see if things have got what actually happens in practice. and that is likely to cause them to probably err on the side of caution and yes, bring back barrels according to their plan as it stands, but I would say that there wouldn't be any rush to bring it back any quicker. I think they would want to wait and see, even if we had sort of a loss of supply from Iran and elsewhere, they'd probably still wait and see. I think there'll be caution until actually, because they wouldn't want, once from OPEC Plus's perspective, don't want to let the genie out the bottle. Once they start bringing barrels back, it's very hard to start putting them back in again, especially when they've had issues with compliance and whatnot. So I think there'll
But
be
that
erring on the side of
compliance, I mean,
caution.
we've had a few articles on compliance. That compliance is improving, isn't it? It did have a sort of material improvement, let's say, in the last quarter of last year, and that a lot of people saying that looks to like to continue. Russia, a headline today that we have is saying, oh, it's been 100% compliant in January. Is anyone really watching Russia in that sense? But is that compliance story, do you think, improving genuinely, and will it continue to do so this year?
I think they have improved. I think you see even with Iraq. I mean, there have been other factors which have helped compliance for some of these outliers. But certainly they've shown willing. And I think that's important. And yeah, I think the compliance issue is going to be less of an issue. I think you may see Kazakhstan is still one of the concerns, because the Tengiz field coming back on, and that's going to be extra supply, and that's going to be an added complication. And there are always these complications with compliance. To be honest, it's been a constant feature, and they've managed to work compromises or accept certain tolerance levels. And I think, generally speaking, they won't want to risk that by bringing barrels too quickly, and so you're more likely to see a bullish scenario from that perspective.
A continuous sort of cautious approach, I suppose, will, month by month. Thanks, Paul. Michelle, let's talk a bit about insurance rates, because we've had a ceasefire implemented in the region, let's say, in the last couple of months, in terms of the Gaza ceasefire, looking very, very vulnerable, with all the headlines we've seen coming out in the last week or so, especially. Is the tanker insurance market getting nervous again about, Red Sea action, Strait of Hormuz, etc., despite the sort of calmer ambiance that we saw towards the end of last year?
I'll answer that question, but first I just wanted to add to the point that Paul made about OPEC Plus and bringing on its supply. I think we have to factor into the equation maximum pressure 2.0 and what Trump does with Iran. He's said that he wants to get exports down to zero. Can he? Will he? Who knows? But I think the fact that he's going to Saudi Arabia for Russian talks, and the fact that the sanctions crackdown on January 10 was done in the full knowledge that they had those levers to potentially reduce supply, without knowing that there was a 1 million barrel per day at the end of the last quarter surplus. I think that impacted the actions of OFAC there. So I just think in terms of what OPEC Plus is going to do this year will also depend on maximum pressure 2.0. Getting back to the Red Sea, the oil flows there have been, really uninterrupted and unchanged by news of the Houthis' statement that they're no longer going to target any vessels except for Israeli-owned vessels. And as I think I've mentioned earlier, I think northbound transits of refined products to Europe have dropped the most because they've got Western interests, while Russian flows southbound through to India and China have been uninterrupted. So I think we've not yet seen any material change, and the fact that there are now it's more unsettled, I think that will really ensure that we're at least 3 or 4 months out from anybody deciding to take any decisive action and return there.
Okay, all right. Well, I suppose we'll wait to see what happens. I mean, that will be a very telling period, won't it, in the next month or two? Thanks, Michelle. Bill, back to sort of energy transition thematics. There was an industry forum this week. It's still going on, I think, in India. A lot of things being talked about there, obviously. But one point being made was obviously India's energy transition as well, and its sort of capability to be able to do that freely, independently, i.e., accessing the minerals it would need, the technology it needs, etc., to be able to sort of meet its own targets. And some concern being expressed there about its access to certain critical minerals like lithium, with China tends to hoard, etc. Do you think there's a vulnerability there for India on its decarbonization journey in terms of its free access to minerals with the market out there? How is that progress going, do you think?
I doubt it, unless there's another real flare up with China on the border and they get into a real row again that, I think the critical minerals will not be what's going to be the bottleneck holding India back. I think India will actually add a ton of renewable energy. They're, back on track last year, put a lot of solar on. That's what keep going. At the same time, energy demand I think Paul's in Delhi right now. Energy demand there is growing, at a fantastic rate. And it's unlikely that renewables alone could keep up even with that growth, much less, push beyond that and push coal out. So you're seeing coal rise. India's energy transition will really be more like an accumulation, more than any place else in the world, will be an accumulation of energy on top of, renewables on top of coal, on top of gas, on top of any other energy source they can lay their hands on, just to try to keep up with the growth, because the economy is chugging along at a reasonable rate, and it's very energy intensive.
Yeah, absolutely. That is one of the economies where there's no doubt about it continuing. Paul, I mean, you're in India, as Bill just mentioned, and there was another headline on our news bulletin saying how India, again, it's sort of we've seen it take less Russian oil compared to the start of last year, let's say, because of sanctions, because of obviously what the US has been doing more recently. And there's a headline saying it's going to reshuffle its trade supply chain to try and buy more unsanctioned Russian cargoes. There are still some that it can and is allowed to access. Do you think that's placed pressure on India as a consumer, having sort of less free access to the sort of well discounted oil, if you like, in the last year or so?
India's shown remarkable flexibility in terms of buying crude. It was a huge buyer of Middle East crude. It still is a big buyer, actually. It's probably still the dominant buyer of Middle East crude. And it switched to Russian crude. It went from 0 to 2 million barrels a day. It will do what India's needs to do. I think if it can get around the sanctions like it has done in the past, it will continue to do so. It's going to be hard to clamp down on that. And I think you remember that the Western world doesn't really want too much loss of supply, because that just pushes up the price for everyone. So and I just wanted to pick up as well on the point that Bill made, which is because it is a really interesting case, India. And Bill's right. It's an all energies approach. They're doing so much in solar and wind. Nuclear has been on the table. Carbon capture and storage, green hydrogen is a big push as well. And oil and gas is unequivocally, unapologetically front and center of Donald Trump talks about drill, baby, drill. India is walking the walk in that regard. They've signed some big deals over this current week with BP and others, with Petrobras, and they're looking to reverse the decline in oil production there in the upstream, and they'll continue to buy. I mean, it's insatiable energy demand, and I think two of the big themes coming out of this week was that the sort of energy trilemma narrative was replaced with an energy justice narrative, and the energy transition was replaced with an energy evolution. Those were the big themes. And while he was, Mr. Puri, the energy minister, was on the stage saying to someone like Ed Miliband, who's been very unapologetic about net zero, they were very much in agreement that everyone needs to walk their own path. And I think that's a big narrative emerging on the world stage, which maybe wasn't there in the same way a few years ago.
Okay, thanks, Paul. Michelle, let's talk a bit about gas and perhaps sort of LNG tanker movement. There's been, a few headlines, obviously, that Europe nat gas prices are peaking. A change from what's happened in the last year or two with warmer winters, but we're seeing that happen. There's a storage issue. Natural gas storage in Europe isn't so healthy at the moment, etc. So pushing those prices up. I mean, does that impact? Are you seeing any sort of impact from that already in terms of the pull of, for example, US LNG into Europe or not, flows into Asia? How's that impacting the global dynamics on the water there?
Oh, you're taking me way out of my comfort zone there. I have to say that I haven't looked very closely at the LNG markets besides the freight cost and really the spot component of the LNG
Yeah.
market. I do know that there's been a very mild winter in China, that there's been the sale of cargoes into Europe, and of course Europe is still talking about becoming more independent from Russia, but peace in between Russia and Ukraine may sort of recalibrate that equation. I'm not really sure and not that close to the market, but I do know that like geopolitics is having a massive impact on the LNG markets in Europe, as is in oil.
Yeah, but also, I mean, gas prices are obviously having you're based in the UK usually. I know you're traveling at the moment, but that does have an impact obviously on industrialization and what's happening obviously in Europe and the UK. There's our survey question today. All markets are overreacting to the possibility of a Russia-Ukraine ceasefire. Do you agree or disagree? We have had obviously a bit of bearish sentiment on prices there as a result of that headline. But again, so many different headlines being thrown around at the moment. Bill, let's talk a bit about China, just in terms of economic outlook there, and obviously the impact that it might have on oil demand as well. You were mentioning the energy transition, how that's progressing also in China. Clearly, but what is the outlook? There seems to be quite mixed opinion out there on the growth trajectory for China this year, whether it is 5% or not, but mixed opinion on whether these stimulus measures that the government's taking are sufficient or are not sufficient. Some would say yes, some would say no. Are we going to see a more settled picture, do you think, in terms of the outlook for Chinese oil demand this year, given that it's sort of transitioned last year to prove where its growth is going?
Yeah, I think, I don't think it's going to get all that settled in terms of the cyclical portion of that, the property problem that China has is enormous. And it does seem to be gaining momentum in the wrong direction. Deflation is picking up. So I think it's going to get significantly worse before it gets better. I do think it will eventually get better, and China does have the resources to deal with it ultimately, but they do seem to be determined to do it a little like Japan did, a little kind of day late, dollar short approach that really drags it out over a much longer period of time and will make it more volatile. It'll get through it eventually, but I think it gets worse before it gets better, and I do think that'll continue to dampen oil demand out of there.
Okay, and while we have you, Bill, let me just stick with you. I want to ask you about also, I know you're just to talk about that US sort of Fed policy, just to get your take on that. I mean, obviously, we've had a bit of a tussle between the Fed chairman and Trump in the last couple of weeks. Trump obviously wants him to continue lowering rates. The Fed chairman and the Fed have stuck to where they are for now, rightly so, looking at the inflation numbers that were released yesterday out of the US. I mean, that seems to be holding steady and strong-ish, if you like. What are oil markets, do you think? How are they looking at what US interest rates might do in the year ahead? Are they paying less attention than they would have a year ago?
I think people are paying pretty close attention. I think Powell's in a tricky spot. I think he's slightly relieved that that while inflation did tick up a bit, it hasn't really. I think he can still make the case that it's agonizingly slowly moving lower and they just need to wait. Now, if it ticks up again, which is certainly possible given, tariffs on steel already, a lot of uncertainty around the other tariffs. I think you're already seeing a lot of supply chains start to get a little gummed up. So if you see an uptick, a really clear uptick in inflation, Powell's going to find himself in a really tricky spot because Trump is pretty determined to push for lower rates. Right now, I think there's a bit of it's not quite a standoff. They're both kind of holding their fire. But I think if inflation does start to tick up, it's going to get to be a very tricky situation later in the year.
Okay, thanks. Paul, you mentioned US production and non-OPEC production. I mean, we've had again some commentary recently and forecasts really for the year ahead that the expectation seems to be that, it'll kind of stay where it is. We're not going to see, we might see a tiny bit of increase this year, but private companies are not keen to necessarily push production any higher, just, despite Trump's drill, baby, drill. Encouragement, if you like, and obviously for the same reasons as ever, shareholder financial returns, etc. Would you say that is your sort of point of view going forward? Would you see US production tailing off where we're seeing it now, or could something push it a bit higher?
Yeah, exactly. I think when Trump talked about drill baby drill, they're for policies around, loosening environmental restrictions. These are much further out, plans. In the near term, the ultimate driver of oil production in the US is price, and Trump wants to lower prices. So how he squares that circle is another question.
Yeah.
He has the US oil lobby on one side and the consumer on the other. He must marry together somehow. And while it's the same with OPEC, Plus. He wants them to bring barrels back to try and lower prices. But then if he maximizes pressure on Iran and takes oil out the equation there, that's actually OPEC supply off the market. Even though Iran aren't subject to quotas, they're still part of OPEC. So there is a lot of contradictions and a lot of things to pan out. And I don't think the market, and as I said at the beginning, I think this paralysis in the market is there. Trade headlines on volatility and uncertainty, but I think no one's quite clear what actually is the full package when it comes to Donald Trump, and what is actually going to be the actual outcome of some of these deals and pressures that he's putting on. What I would say is, yes, the idea of, then there's still this idea in the market that US production is somehow going to be well above 200,000-300,000 barrels a day in 2025, and I think that's totally misplaced. I think 200,000 barrels a day is probably where we're at. It's still going to be record highs, and it'll make for great media headlines. Record high US production of 13.3 or 13.4 million barrels a day, but ultimately it's slowed immensely, and we're talking about plateaus and peaks in certain demands and production, and China and things. But actually, US production could be something that starts to peak at some point, later this year or next year, and that's not really something that people have talked about so much.
Okay. All right. Thanks, Paul. Michelle, we've seen, obviously, you mentioned the maximum pressure sanctions that could come on Iran from the US, which would presumably trickle sort of Iranian exports down to obviously a lot less. Now, if they are effective, from the sort of shadow and dark fleet perspective point of view, and those who are sort of operating those ships, and the sort of obviously trickle effect on insurance on that front, where do you think that leaves it? There's been lots of calls for more stringent regulation of that fleet. And yet, if we see the sanctions take effect, is there less reason to do so? How do you see the two impacting each other?
Well, at the moment, Iranian exports are about 1.7 million barrels per day. Most of that is heading into China. At the absolute peak of maximum pressure, I think exports were down at about 700,000 barrels per day. But the problem is the visibility into those flows is getting more and more opaque. It's either the National Iranian Tanker Company ship fleet, or it's the dark fleet that are responsible for their transport, and they're operating completely outside normal regulatory scrutiny. So it's not as if it is even possible to enforce anything, because their flags are unknown, or they're Iranian controlled. They're not restricting they're just completely ignoring maritime rules and conventions. They have the right of innocent passage in areas where there's floating storage. So the logistics chain is just more inefficient. It's more complex. It's more opaque. and sanctions drive those ships. Obviously, they're highly, they're very dangerous environment to the environment and very unsafe. But those sanctions are driving them to the maritime fringes, and really, it's the appetite of China to receive those ships that ultimately is going to result, and that's how you're going to measure the effectiveness. And at the moment, you're seeing continued arrivals of those barrels into China.
And why not? I mean, why would China, not continue to take that? I mean, of course, it's the geopolitics then comes into play. Does it you want to use that as a card? But why not? There's our survey question result. They're not overreacting. 54%, pretty equal there. It remains to be seen what comes of those talks. I mean, Bill, very quickly, just back to you, just to get your point of view on this choice of possibly having talks in Saudi Arabia between the US and Russia. I mean, can I get your opinion on why you think Trump would even mention that? What do you think is behind it? What would be Saudi's interest in holding that?
Yeah, I don't know. That's an interesting question. I do think that it does seem unlikely that Trump is going to try to divide OPEC Plus in Saudi Arabia. If you were going to do that, you'd think they'd do it outside of Saudi Arabia. And that's probably the biggest, club he really could wield, would be to try to divide, to cleave Saudi or cleave, Russia out of OPEC Plus. That could be really problematic for Russia. But it seems unlikely he's going to do that in a meeting in Saudi Arabia. So
remains to be seen.
It's hard to
Thanks,
tell.
Bill. Thank you so much. And thank you to Michelle and Paul also for joining us today. A day is a long time in Trump world, isn't it, for changing policies? So we wait to see what comes out tomorrow and next week. Thanks so much, everyone, for joining us. Have a great day ahead.
Thanks all.
All the best.
Thanks.